Welcome to Breaking Banks. Welcome back to Breaking Banks, the world's #1 fintech podcast and radio show. I am your host, Brett King, and joining me in the hosting chair is Ajit Tripathi. Are you in the UK, Ajit, or where are you today?
Yeah, I'm back in London after a wonderful Bitcoin Miami.
Bitcoin Miami, how was that?
That was absolutely amazing. It was full of digital assets.
It wasn't a super spreader event?
It was, but that was because a bunch of Europeans who didn't want to get vaccinated and managed to escape into the US through Mexico.
Into the US through Mexico. That's we could do a whole show on that. So we're going to be talking about ESG today, sustainability. We're going to be talking about the role of the financial services industry in that. Joining us today are three guests. I'm going to introduce them all right now, but we're going to progressively discuss with them. We have Yuval Rooz, who's the co-founder and CEO of Digital Asset. We have, welcome Yuval back to the show.
Thank you for having me.
We have Marley Gray. He's with Microsoft. He's a principal architect on blockchain at Microsoft. Marley, welcome.
Thank you.
And we have Joe Madden, co-founder and CEO of Xpansiv. Joe is an experienced entrepreneur in the clean, green economy, and Xpansiv is a marketplace for ESG. We're going to get into that in a moment. But first, Yuval, kicking us off right out of the gate, last week there was some interesting news. Digital Asset announced a partnership with NASDAQ to bring your DAML platform or driven applications to NASDAQ. What does this really mean for NASDAQ and Digital Asset partners?
Absolutely. Well, first of all, Brett, Ajit, thank you for having us and looking forward for the next discussion about ESG, but specifically about the NASDAQ announcement. As everybody knows, everybody usually familiarizes themselves with NASDAQ being an exchange in the US. They don't know that NASDAQ also operates exchanges globally. So they run other exchanges outside of the US in different asset classes, but they are also a technology provider. So when you look at the NASDAQ marketplace, this is coming from their technology team that are allowing people to issue digital assets and using a lot of the tech ecosystem that NASDAQ had to create for their own markets and be able to use those technology tools to build new types of asset classes, use their matching engine technology, and allow to build like really new businesses on top of their tech stack. So really what we've been doing with them is integrating the ability to issue and create applications using Damo, our smart contract language. And from now on going forward, you'll be able to build Damo applications, eventually integrate into their matching engine, be able to trade those assets on NASDAQ technology.
Absolutely. And so are they already using your tech at NASDAQ, and that's what brought on this partnership, or is this sort of brand new out of the blocks?
NASDAQ has good familiarity with our technology, is all I will share.
Awesome. Excellent. Now, most recently, you were also asked to join the, Global Blockchain Business Council?
Yeah. So Digital Asset have been a member of GBBC for quite some time. The recent announcement is me joining as one of their board members. And again, I think that Sandra has done a really good job showing the capability of this technology, but also creating a good market or an organization that brings together all types of participants. So all the way from vendors, those that are actually building products or tools based on this technology, all the way to the customers that are going to consume this technology, but to standard bodies, government bodies, really building a really nice ecosystem. And I think have done a great job pushing forward and helping everybody who's participating in this industry.
Obviously, there's a lot of potential in respect to blockchain being used for a ton of applications. But one of the specific areas we wanted to talk about today was the use of blockchain in the ESG space. But specifically in terms of the work that Digital Asset is doing, obviously DAML looks at a bunch of capabilities where you can use this tech. Which industries do you think are more advanced in respect to the utilization of blockchain today, whether it's in the supply chain or whatever it may be, in financial services in general?
Yeah, so I think what you will hear today is that in the ESG space, quite advanced projects are progressing. But outside of that industry, I would say that financial services are probably leading the charge on using this technology. But you're already seeing today insurance, supply chain, healthcare are those that are kind of right behind it. But this is going into just so many different industries. I started seeing cases in IoT, self-driving cars, like there's just so many different industries, but I still think that way ahead are financial services, supply chain, insurance, ESG would kind of be the top industries that I would state.
So Yuval, you and DA both have had an interesting journey in the sense that I think chess was the first major project in Australia that DA did a lot of work on, and I think there was I think a message from Dominic Williams. Is it Dominic Williams? Dominic Stevens, who said that the volume of transactions on chess will far exceed anything that we are seeing in the crypto asset industry. So, I mean, do you see that coming through? And since then, you've also built technology that doesn't necessarily require the use of a blockchain. So, can you tell us what that story has been?
Yeah, so I think I started looking into crypto and blockchain in about 2012, 13. More working for DRW Trading, who's the owner of Cumberland Mining, which is a big OTC crypto market maker. And we started building blockchain applications. And one of the things that we ran into quite early is that building these applications in a way that scale, maintains privacy where you want privacy to be maintained, becomes very complicated very fast. So really the background, the goal for Damo was, how do we abstract away building distributed application from all of those complexities that developers run into very quickly. And that was really the genesis of developing a brand new language. A lot of people are trying to take existing languages and restricting the behavior. And we really wanted the developer that goes into the world of distributed applications to say, I'm in a different world. I am no longer in my traditional enterprise application development. I'm now doing something different. I need to think about things differently. I can't just print a log to say what is the state, because that log might spill information that I'm not supposed to see. So there's different things that you need to think about as a developer. And that was the goal of Damo. And we were building our own blockchain. And then what we started seeing is that you start having all these blockchains appear, right? And effectively, we believe that blockchain will become a commoditized product. And when I say that, I'm not saying that as a negative word. I'm saying that as a very, pragmatic, right? Like it's like cloud today. You could look at all the big cloud providers. For the most part, you get Kubernetes, you get storage, you get, identity management, you get a lot of those building blocks. And there's not that many significant differences. So what you will see when you hear Marley talk, but what you're seeing from cloud providers is them trying to differentiate themselves, offering different services. We think very similarly about blockchains, is that eventually there will be the leading blockchains in the world, but at the end of the day, the difference in what they provide to the customer is not going to be that significant. And we wanted to create a development framework that allows the developer to say, I'm building a distributed application. Is it running on Corda blockchain, Fabric blockchain, VMware blockchain, Ethereum, public Ethereum, Base? It doesn't really matter to me. I'm trying to build a distributed application. And that's really what Damo provides the customers, this uniform ability to build distributed applications deploy it even on traditional technology today, think Postgres, Oracle databases. But if I wanted to move it to the new world of blockchain, I won't have to rebuild my entire application stack. And this really has been the journey, and it's over the last few years have very resonated with clients, because I think that one of the biggest issues of this technology from an adoption perspective is, imagine that we're now working with an insurance company. They want to replace their entire admin platform. Imagine you say to them, you need to bet on a technology, and if you make the wrong bet, in 2 years, everything that you've been working on for the last 2 years, you'll have to redo from the ground up. That is not something that an insurance company wants to do.
We seem to be entering this new era of sort of programmatic conception. You know, we've got quantum computing, we've got distributed applications. They all require pretty different thinking in respect to design than what we had in the 20th century. But I guess that's fitting as we go to a world that relies on digital, whether it's distributed technology or whether it's quantum or whether it's AI. You know, the whole world is going to run on tech, you know, and so we need much bigger systemic thinking, I think, you know, in respect to this. But you know, it wasn't lost on me that Ajit has his ETH t-shirt on today.
So that's Aave. So Aave is, you know, is a very, very well-known decentralized finance protocol. And so Yuval, I have the opposite journey of you. I went from enterprise blockchain to crypto, and you came from crypto to essentially enterprise. So, you know, we have had this journey where enterprise was really a big thing, and everyone was doing enterprise blockchain for 3 years, and then crypto really took over, and enterprise kind of receded into the background. And I think your insight there, because I've seen now a number of, you know, enterprise blockchain projects replace the underlying ledger with a database, is quite remarkable in the sense that, you know, the smart contract layer is still there, and that's kind of, you know, what you can build with Damo, whereas the underlying ledger. So how did you come up with that insight where you said, look, okay, let's just decouple the ledger, you know, which is the underlying recorded transactions and who owns what, from the actual smart contracting language and the domain specificity?
Yeah, I think it's actually fairly easy. It's not that deep insight. You're going to talk to Marley and Joe, and really where the value, where the IP comes in, is the IP and the knowledge in the business process, in how you run. How do you build a global registry of carbon credits? How do you build an exchange that brings together multiple different silos of ESG registries? Like those type of things, that's where the IP is. And for us, what we wanted to do is, how do you separate your IP from what technology you're using? At the end of the day, a customer might say, yeah, in the future, maybe blockchain will have some value add to us, maybe not. How do I actually build my application in a way that I don't have to bet my business on it today? And that's really where the insight came from, is that Damo really helps the customer capture their IP, their business, and it does it independent of what the underlying technology, but it gives you much more optionality into the future. The second part is really, again, looking at some of the protocols that are out there that really forces the developer to know how these underlying technologies work in order to build a scalable, secured application. I think that a good analogy would be the equivalent that everybody who wants to build today a website really needs to know how TCP works for that website to work. That would be insane. Like that would be like, nobody would actually ever say that, like, you would be able to do anything. There was a time. You're right. There was a time.
There was a time.
It was in the late 1960s, perhaps.
So 80s or something, yeah.
But the point is that smart people were able to say, well, actually, if you want to be very productive and if you want to be able to create websites and innovation on the front end, you can't expect every developer to know the inner works of TCP, SSH, and those kind of things. And we think very similarly, if you build a distributed application, whether the distributed application runs on a decentralized ledger, whether it's an open chain, a closed chain, or you run it even in an Oracle database, there's just so many different repetitive patterns that are hard to get right. And what Damo does is it abstracts all of those away from the developer. And that's where we're seeing that building very complex things like what Joe can talk about that he's doing actually end up taking a fraction of the time to implement. So it's not just giving you this abstraction or not having to bet on a technology, but it's also how do you get into production faster, thinking that you could actually run this thing in production. And then the last thing before we go to the next subject, Brett likes to talk about smart pipes. He talks about that. He mentioned that phrase. And one of the things that we mentioned in our last funding round is building a global economic network. And we all know, I mean, Ethereum, all know every public chain is trying to say, I want to become the computer
I was
of the
going to
world,
say,
right? And we believe that there's not going to be one computer that will run the world, right? It will be a mesh network, no different than the internet today. The internet today doesn't say you have to run on this server. Right? There are protocols that allow you to connect one to another, but you have different networks. And to us, really, the vision of Damo is how do you create this global economic network, which is going to be a mesh of many different networks that have those smart pipes that connect between them, right? That to me is a more realistic vision of where the world is going, rather than to have one DLT, one blockchain permissioned or not to rule them all.
I think we've definitely come, even in the crypto space, we have kind of settled on this multi-chain hypothesis. That's definitely a reality. But right over to the next.
Let's just ask Joe to join us at this point. So Joe, this is a good point. You're in the commodities space. Tell us a little bit about Xpansiv before we jump into the question about how you guys are utilizing blockchain in the specifics.
Yeah, absolutely. Well, first off, pleasure to be here. Thank you, Brett. So Xpansiv, we operate infrastructure and markets across carbon, renewable energy, water, and differentiated fuels. So we have an end-to-end infrastructure stretching all the way upstream into raw data and associated ESG data, in through portfolio management, into spot markets, exchange and settlement, and then into data. So the exhaust of those. And I think at the core, to Yuval's point, I'm not a technologist at all. And so we could either—
We won't hold that against you, Joe.
Yeah, exactly. I hope not. But the need for the global economic system to incorporate new forms of value is, it's fairly pressing at this point, and that would be an understatement. So, we could either be really good at technology or really good at markets and design of markets and the creation of these new forms of value. And so that's kind of our core competency. So when we talk about a global economic network, really requires interoperability and scale. When we think about this, the work that DA has done and with Damo, that interoperability allows you to really link together a network from an information perspective that actually feeds new markets and new products, or feeds new products and information into the sort of global commodity market complex. So that's kind of the world that we live in.
Now, in the condensable energy market and the commodities market per se, as you say, there's a lot of trading that goes on. There tend to be the traders have their own systems, disparate systems that they work together on. But how hard is it going to be to bring together the world's sort of energy trading and commodities markets on these sort of blockchain-based systems?
Well, so if we think about the proliferation of data at the edge, right, IoT, and then large-scale data aggregation, that's all happening, outside of blockchain. People are data's proliferating, and it is, it's being generated and then aggregated up and becoming more accessible. So that's all happening with or without blockchain. And then when we think about markets then tend to need integrity. And that's where you start to get into provenance of data and things like that. So there's a sort of a direct relationship between the aggregation and configuration of data, and then the provenance of that data so that markets can actually rely on what's happening. Because if you get into ESG, it's all information. Nobody's ever delivering an avoided ton of carbon. No one's ever delivering, the methane intensity of natural gas or the water intensity of a bushel of corn. That's all a digital construct, right? So that provenance of data and then the interoperability to allow that to stream into markets is sort of essential.
We definitely will get into some carbon sequestration stuff when we ask Marley to join. But at this point, it seems fairly certain as we move closer to the Paris Accords that there's going to be a lot of sort of carbon tax type trading and negotiations. We've got a lot of organizations claiming they're going to be carbon neutral. There's a ton of initiatives, the Trillion Trees initiative. I think it was $1 billion at the start. Now it's $1 trillion. There's all of these different initiatives where people are able to use these elements to, offset carbon. But as in terms of, the traditional energy market in the commodity space, how much pressure do you feel is coming on the big oil companies and the big coal mining groups like Rio Tinto and others in respect to their carbon platform?
So I think you can't understate the role of the capital markets and the equity markets in this. So if we think about the drivers prior, maybe being regulatory or policy driven, these are really free market signals, right? So you have the cost of capital and share price being directly linked to ESG performance. And so the net zero commitments are a result of that pressure, right? So then it's a matter of mapping something that's practical and achievable in association with those. But at the core, those drivers are different than they were even 5 years ago, right? So it's direct pressure. And it's now a financial question, and the analysts and in capital and equity markets are using that as a lens to gauge performance.
So how we more specifically on terms of the Damo stuff, how are you guys implementing that, and where is that making your ESG mission more powerful, more effective?
So I think from our perspective, like this is all about scale. And going back to Yuval's comment around a global economic network, there are disparate systems. There's multiple ledgers. And when we look at this, you're sort of moving from a disorganized data set at the edge and then moving closer and closer to organized markets. The infrastructure that we're working with DA on really allows for a centralized approach or a common approach to things that start off very disparate in markets, but all relate back to ESG. So whether it's the GHG intensity of a barrel or the methane performance of natural gas, or the attributes of a biofuel, or even the attributes of an underlying unit of carbon, all of that has to come back and be able to be managed in the same way that you manage other assets and transact them and move those into markets. So the core infrastructure that we're working on with Yuval and his team really is designed to allow us to scale up that and have a sort of common interface with all of that disparate information at the edge.
Awesome. Well, listen, guys, we got to take a quick break. Let's do that, and when we come back, we'll be talking to Marley Gray and Joe Madden more about how ESG is evolving in terms of corporate culture and how organizations adapt to this new platform. You're listening to Breaking Banks. Ajit Tripathi and myself, Brett King, we're hosting. We'll be back with you in a few minutes. Well, welcome back to Breaking Banks. Before the break, we were talking with Yuval Rooz from a Digital Asset, talking about their work they're doing with NASDAQ and also the work with various exchanges and partners on the blockchain and with Damo, their distributed application technology. Joe Madden joined us from Xpansiv, talking about their work in the space. But at this point, why don't we introduce Marley Gray into the mix. Marley, you head up blockchain initiatives at Microsoft, and in particular, you've been working on Microsoft's carbon neutral mission that they've stated most recently. Where does blockchain fit into the ESG mission for Microsoft?
Yeah, so it's an interesting journey. So we did make actually we made a carbon negative commitment by 2030.
Good.
Which is a little bit more ambitious.
Thank you for the clarification. Yes.
Sure. So that was made, at the executive level, and it goes down to a team to execute that. And as you try to get to a negative or a net zero position, there's two strategies. The first is, control what you can control, lower your GHG or carbon footprint as much as you possibly can, with your scope 1 and 2 emissions.
For listeners, what is GHG?
Greenhouse gas. Sorry. So,
right.
So carbon, usually use carbon like we talk about the US dollar. It's sort of, we say everything is equal to carbon. So we'll talk about, we measure carbon and carbon equivalency. So amount of methane is equal to X amount of carbon. So, a group was assigned that task for, you have to, let's drive efficiency throughout Microsoft's campuses and our organizations, our data centers, everything. And then when you've done all you can there, you then need to offset the emissions that you can't avoid. And you do that through, in the voluntary space where Joe talked about the culture changing in corporate America, where we're making these pledges for ESG purposes that directly affect our stock price. So that's a voluntary space. So you're going out and you're purchasing carbon credits that you'll spend, which is essentially the offsetting to or retire them to lower or net your effective emissions down to whatever your goal is. And you want to show that over a 10-year period and show progress. When you look at that and you say, if you think about this logically, and everyone, and if we're going to do this at a global scale, and the first order of business is to lower your own emissions that you can directly affect. So that's driving efficiencies, and then offset. So step 1 and then step 2. We looked at our step 2 and said, if we're going to get to a negative position, we need to look at a specific type of carbon credit, and it's what we call a carbon dioxide removal. And it's specifically a carbon credit that's based on a claim of someone removing carbon or carbon equivalency from the atmosphere and storing it either in a nature-based solution or technology or the geosphere, wherever. There's several different options there.
So you're talking about something similar to the X Prize that Elon Musk and Peter Diamandis recently announced, $100 million prize for development of carbon sequestration technology. Yeah.
Yeah. There's a sort of there's a couple of different ways to do it. There's the nature-based solutions. So forestry's been around for a while.
Right. Lots of trees.
Yeah, agriculture and agricultural practices is a massive contributor, but also potential for capturing carbon in the soil through farming practices. And there's lots of energy there in the ag space to sort of both, use that and also monetize that for another revenue stream for farmers.
How do you capture carbon into the soil as part of farming?
That's a good question. And it has to be science-based. So you have to be able to make a claim and you have to prove it. So there's a couple of techniques that are being, and it's usually a combination of techniques, whether it's doing something called no-till, where you don't actually till the land before you plant your crops, which tilling up the soil releases carbon into the atmosphere. Using cover crops. So instead of leaving your fields fallow between seasons, plant a cover crop that will have deep roots. So there's certain crops that will capture the carbon and store that carbon in the roots. So even when you burn the cover crop and destroy it, that carbon's still sequestered in the soil unless you till it up, right? So you have to do those types. There's many other ways to do that, controlling nitrogen and things like that. But then there's this interesting bit on the technology side where we talk about direct air capture, having a factory that's just sucking massive amounts of air and through these filters and using a chemical process to capture the carbon into everything from putting it and pumping it into a gas that you can then store in a abandoned well. There's also a technique where you use that carbon that's been captured to pump into an existing well to get more fossil fuels out, which is not necessarily a net negative thing, but it can be. But then there's also potential for putting into physical materials, carbon-based building materials, or so that's where you look at this projects that people are trying to innovate to figure out ways of removing carbon from the atmosphere directly and storing it, and that has a lot to do with what we call durability, and that's how long is that carbon stored, and that really dictates how valuable the credit that you're ultimately purchasing. If that credit is good for 1,000 years or longer, then that's extremely durable. But if you borrow forest credit, the durability on a forest is 100 years at best. There's forest fires. There's all techniques there. Farming you can have accidental breaches. Somebody can till a field that wasn't supposed to be tilled, and the existing credits that were issued for that now have to be adjusted. And
cows that aren't supposed to fart.
Exactly. So it's complicated, but
now you're a technology guy, right?
Right.
Obviously, there's been a pretty steep learning curve, and Joe, I think you jump in here as well in this space. What has it taken to get you guys to a point where you can talk about this stuff and be knowledgeable about these carbon sequestration technologies and things like that, so that you can drive these programs from a corporate culture perspective?
Well, I'll tell you, it's about 1.5 years for me of being steeped in this and not knowing anything, and tons of reading and meeting with countless numbers of organizations. The good news is most people are trying to figure this out at the moment, right? It's real time. So you don't come in with hugely in the hole. Now, there are lots of people in the science and academic fields that are way advanced in these areas, but for the most part, you go to any large enterprise and you talk to their sustainability teams, and they're scratching their heads just as much as anybody else is. And it's going to take collaboration.
Yeah, it is that cultural element, right? How do you get the company as a whole, in terms of Microsoft, to understand what are the individual actions, the collective actions you need to take to be carbon negative? That's the culture that you're trying to create there. And so just like we talk about digital transformation, we're talking about ESG transformation or carbon negative transformation. It requires a cultural shift, right? So is this top down?
So it's interesting. Just to I think, I don't know what my timeline is in here. It's maybe 15 years. I think many of the folks with background in this space, whether it's the market side or the verification or registration or certification side, or even some of the programmatic approaches at the national and international and subnational level, the prior drivers were mostly top down, and I think what you see now is, and I think in my own personal journey, it came from seeing what worked potentially or didn't work from a top down, and then also seeing how you might be able to build something from the bottoms up. And I think that's where we're at this point. That if you're going to transform the way the global economic system translates, understands, and communicates value, you have to have a new system to do that, because the current one was designed on something that's about 150 years old. And that involves the markets and really being able to bring that information into the market. So I think it's almost like a new set of plumbing, if you will. And then all of a sudden the
with new
top-down
language,
approach
new terminology.
but then the top-down approach can take a new approach. It's kind of hard to take what is and just flip it. You have to transform it, I think, if that makes sense.
Absolutely. Ajit, go.
Yeah, so a couple of things on that, right? So, I mean, ESG, there's a lot of skepticism about ESG out there. It's, we've had a number of banks starting to talk about ESG, including Deutsche Bank. We have had Elon Musk change his views a few times on Bitcoin and ESG. We now have China making a big, push towards carbon neutrality and so on. So, I mean, so a couple of questions. What's the role of technology here, right? As in, and how does DA's offering kind of play a role in helping ESG be something more substantial than essentially, a word that not a lot of people really understand?
Yuval, I mean, have you guys had to develop new tech to work for this space?
No, so, and I want to make sure, Ajit, I don't think that there's any disagreement that ESG is important today. I think that there's a lot of usage of ESG that people disagree, but I don't think that there's any disagreement that ESG...
there was that famous, kerfuffle over Standard Chartered, who announced they were going to be all, ESG, carbon neutral. They weren't. No, they announced they weren't going to fund any more fossil fuel-based programs, and they got caught underwriting a $400 million loan to Rio Tinto. So,
right.
There's a lot of ESG press stuff, which doesn't necessarily make it into the cultural, or policy side of the banking and finance space.
I think my only comment is that ESG is real and something that we must focus on. Are there always going to be bad actors that join the bandwagon of things that are a hot topic? We all seen this thing called ICO in 2017. So, Ajit, if we want to go into your world and talk about, the ridiculousness of what happens in different spaces. So first of all,
I think the question is how.
But let me get. So sure. I think that ESG is a real thing and something that we must solve. Period. End of subject. And we need to be able to separate the good from the bad. I think that if you ask Joe, who's been in this space for a very long time, this idea of carbon credits is nothing new. It's actually a very old concept, and it's a good concept. It's trying to use free markets to force companies to drive good behavior, because if they don't, they will run out of business, right? So it creates some kind of a financial... I think that the biggest issue that existed in carbon markets, and I think this is where we come into play with our technology, or this type of technology, is that there was not a good way historically to verify and validate that a carbon offset that you have registered, or any type of carbon credit, is been registered once, it's actually valid, and have all the different actors that might be interested in this carbon credit know about its existence. So what you have seen, even till very recent years, is quite a lot of fraud in the carbon registry business. And I think that's where, I think that the only thing we haven't developed anything new is, given the momentum that exists in this space and the interest of players, and I'm actually talking about genuine interest, not those that are just trying to make a quick buck, but actually companies like Microsoft who are really trying to be carbon neutral, or like Joe's company who are really trying to bring these solutions. I do think that this technology lends itself well to create a much more confident registration of carbon credits. And that's literally all it is. I mean, it's can you use this technology to bring confidence into the world of carbon credits? And it's nothing else other than that.
So, Joe, how do we create transparency in terms of the carbon credit market as a baseline for all of these other things that we're going to be doing? Because ultimately, this is about the transparency in terms of responsibility of each corporation to be doing the right thing. So,
yeah, and I would say that as we think about this, I think the existing systems that are out there. I mean, while there's folks point to challenges in the market and some bad actors and things like that, the amount of learnings and benefits that the groups that are out there today, which we work with today, they're amazing people and have had and organizations that have had years and years of experience, I think, at what is needed to get down to integrity and things like that. I think what's before us at this point is the potential to scale up all of that knowledge, right? So you have that opportunity now, based on the potential for some of this infrastructure to support almost all of those learnings that have happened. But I think I want to be super careful, because I think there's very solid organizations out there that have done an amazing job to sort of build these early markets, and want to make sure that there's a transformation or a growth that happens. But we need to incorporate and include and move forward kind of from what is to what will be, because there's an awful lot of work that's been done and foundation that's been laid for these as we look to go forward. So I just want to, I see this as a migration of taking now basically knowledge and experience and then scaling that into what can be, because it has to be.
And Marley, in terms of your experience with that, do you think that marketplace and the transparency of what other organizations are doing is becoming clearer?
Yeah, I think, so we saw this as a problem when we went to go source our own supply last summer. There wasn't enough of what we were looking to purchase anywhere that we could essentially have confidence in. So it goes back to what Yuval was saying, is we were not confident of purchasing off the shelf carbon removals that were in the market. And there were some reasons for that. And so we sort of put our heads together in the industry and said, what we really need to do is we need to have everyone get in a room and let's agree on how this process for creating verified supply, how it would, from cradle to grave, let's describe that. And it was hard to find anywhere. You could find snippets here and there. So we did that through an organization called the Interwork Alliance. And Digital Asset was in there helping us document this. We had lots of members there, and we were finally able to do that. And some of the basic things were to really have a consistent way of making claims, because essentially a carbon credit is an intangible asset, a digital asset or token, whatever you want to call it, that's backed by some verified claim. And those claims can be sourced from, like we said, the diversity of forestry, farming, direct air capture, all those things. And if they all have different ways of making claims,
right,
then there's n number of ways of verifying it, which is going to end up with this hodgepodge of carbon credits that no one can understand. So we need to have some consistent,
And at some point, that's going to come into taxation for sure, right?
Yes.
It has to, right?
Yeah. So I think that the thing we're seeing, the digital that we can use for blockchains and distributed ledgers for, and technology like Damo and marketplaces like Joe's can use, is defining the way claims are built over time, and they're cryptographically provable, and they can then be independently verified. And then once they're verified, a digital asset or token can be issued that can then be in a standard format. So it has all of the data that you're expecting to see. So someone can evaluate that, and an exchange or marketplace can list it. And someone like Microsoft could discover it and have confidence in that thing, so that we don't have to go do an RFP process and do due diligence on 50 projects to source that's a very costly thing for us to do.
Yeah.
And obviously not something that's scalable worldwide for corporates.
And Ajit, if I can jump in real quick, specifically.
Absolutely.
So now let's tie it back together with the conversation Brett asked earlier. Did we create anything new from a technology perspective? Exactly. No, I mean, if you think about everything that we discuss in the ESG space, clearly is a very complicated ecosystem of multiple players that either need to share data in real time or actually are even competitive with one another, but do have a joint mission, which is to prevent fraudulent carbon offsets, for example. So is there a way to use technology like Damo, blockchain technology, synchronization between data sources to create Brett's term smart pipes between all the different carbon registries? So I can at least verify, let's say I'm a carbon registry in one country, and some shady character comes to me and says, I want to register this carbon credit. Is there a way for that registry to verify, was this type of carbon registered anywhere else in the world, without necessarily having to get back from the network, oh, here's that customer that they registered and here's how much money they got for it. But even just to get, through these smart pipes, yes, this individual tried to register this identical carbon, so you shouldn't be doing that, right? So I think that really what we're doing, what we're working with Marley and with Joe and those type of firms is, how do you create these multi-party applications that in sometimes you do need to share information in real time, and sometimes you just need to know that something exists without you necessarily needing to know all that information. And that's really where we think. Yeah, go ahead.
So is this where having DAML and sort of a consistent, a common language for expressing the ideas in the domain across different organizations with,
that would be one example. Like, how do you codify what's a carbon credit looks like, right? How can you consume
it's crazy there's not like an international standard on this already. Joe, how are we going to get to that?
Well, so I think there are multiple standards in certifications, and I think what going back to your and a ton of expertise associated with those, but going back to your question about top down versus bottoms up. So whether it's on the regulation or policy side, there's been multiple jurisdictions that have taken their own actions. And it's been at the international level, it's been at the national and the subnational level. There really has not been a unified approach, at least at the policy or regulatory level. And I think the difference, or what's happened now, is the free market is a global umbrella. Right. That, right? So you actually have something.
It's had to be because no one else has done it, right?
Right, but it is actually that, and then you actually can take that bottoms up to feed a free market, as opposed to configuring to meet a market that was designed by a regulatory body. Not that any of the regulation or policy was ill-intended or anything like that, but it was disparate. And so when you take a bunch of disparate approaches, you get sort of a lack of standardization. Now you're starting to see these driving factors, and I think Marley is articulating that from Microsoft's perspective.
So let me, Joe, Marley in particular, I'll direct this to you. I want you to put your future hat on here. We're 10 years out. There's no debate anymore that climate change is happening. We're starting to talk about mitigating sea level rise and, what's going to happen with Bangladesh and the Maldives and, Miami and so forth. In terms of this, what do you think of the global market in terms of carbon sequestration and carbon negative? What does that look like in 10 years' time? And what role, and is the blockchain going to be the thing that glues all this together?
So I'll give you my perspective is that carbon and ESG factors are on par with the existing market size or bigger than the existing commodity markets in general. And I would include fossils as a subset of that. That would be my perspective of the market sizing. I think we really can't actually comprehend the size of these markets. I think it's a different underlying. We don't have these signals today.
It's a completely new way of thinking about the market.
We could price crude today out to 2050, but you don't know what the price of carbon is in 2050. But we will, and you'll have different products, just like you have WTI or Brent today as futures products. You'll have multiple different signals around all kinds of ESG factors.
All right, so maybe Yuval, how would you sort of like to close this up in terms of the digital asset and the work that you guys are doing, and how can others get involved in this program? You're on mute, pal.
Sorry about that. So listen, I think Joe and Marley, first of all, are two really good partners. I think that, the work that both Joe and Marley are leading, both of them have room for a lot to participate in. At the end of the day, they are trying to create a network effect. I would say that Microsoft is trying to lead the charge on doing really good for the world because it aligns very well with their commitment to the world to become carbon neutral. And they're trying to figure out, as Marley described earlier, how do we solve our problem? And hopefully by doing that, we solve a big problem for other companies. So I think that there's different players that can join, if it's those that can bring value of how to solve carbon offset better than today, all the way to financial players that want to play in that ecosystem. And then Joe is really trying to build an ecosystem, both from a supply and demand side. So I think that there's many who can approach both of them to participate in what they're doing. From our perspective, I think that these two projects both align really well for us as a company, because we do believe that ESG problem needs to be solved. So from a moral perspective and something that must be done. But also we do believe that these two projects really take advantage of the full value proposition of Damo. And that's really why we like them. It's how do I create standardization and smart pipes between infrastructures that traditionally never communicated or never had these smart pipes between. Right. And therefore, as a result, where I can't remember who said this, it's not a question of does it work, it's now how do we bring scale. And I think that to me is really the part that is missing. Suddenly you have this massive demand side, and the infrastructure just doesn't know how to meet that demand. So therefore, I think that this is a really good usage of our technology.
Fantastic. Well, Yuval, Rooz, and the digital asset team, thank you for the work you're doing in creating these marketplaces and capabilities for this. Joe and Marley, you guys, I see this is a career you could become truly passionate about. It is
absolutely
that, can change the world, and so
totally worth.
Yeah, Joe, for the work you guys are doing at Xpansiv, Marley, for the work that Microsoft is undertaking, we're with you in this, and we thank you for the efforts you guys are making in this. We have to change the rules. We have to do things differently, and it's great to see organizations like you getting in on this. That's it for this week, guys, for Breaking Banks. Thanks, Ajit, for joining us and the co-hosting chair.
Thank you so much, Brad,
Marley,
Joe, Yuval, and Marley.
And don't forget, if you like the show, leave us a 5-star rating, tell your friends about us, put it out on social media. That's how others learn about the great content at Breaking Banks. Thank you again, and we'll see you again next week.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.